A polite handshake, and the US and Chinese delegations part ways. Talks in Washington ended without agreement after President Trump had upped the ante in an escalating dispute over trade. Trump was bullish on a favorable outcome. "No need to rush," he tweeted, after slapping a 25% tariff on a further $200 billion on imports. A total of $250 billion worth of Chinese goods are now subject to the tariff. The levy is a sharp hike from the previous 10% import tax, so a heavy blow for China's export-oriented economy. Beijing is alarmed and called for a compromise.
We hope the US and China can meet halfway and respect the legitimate interests of both sides.
Chinese Vice Premier Liu He and US Treasury Secretary Steve Mnuchin head the negotiation teams. The US is concerned about a ballooning trade deficit and accuses China of blocking access to its markets. It is not clear when the two parties will meet again. Trump took to Twitter to dispel worries about a looming trade war. The income from levies on Chinese goods will be used to prop up ailing sectors of the economy, he promised.
Well, let's get more on this from DW business correspondent Janelle Dumoulin. And in Washington, we have Oliver Salet. Welcome both. Let's start with you, Oliver. Today's talks ended not long after they began. What happened?
Well, those were really brief talks, in fact, that's right. And it did not come as a surprise, though, if you take into consideration that the talks were actually stalled a week ago already, and negotiators were not very optimistic when they went into the talks this morning. They then went on to the White House, including the Secretary of Treasury Mnuchin, to discuss the outcome with U.S. President Donald Trump, who, by the way, makes a very content impression. He's been tweeting all morning long. He says essentially that tariffs are good for the U.S. economy, and he also continuously tweeted and stressed that the Chinese would be paying for the tariffs eventually. Economists, however, are challenging that. They believe that the American businesses that would have to pay the bill in the end of the day, and that they would also pass that on to the consumers when, for instance, consumer electronics would become more expensive. That said, all goods that are currently in transit, say they had left the Chinese coast on a container ship, for instance, and that would take 3 to 4 weeks to arrive in America, these goods are excluded, and that gives the negotiators a certain time frame, again, to renegotiate should they get together within that time frame.
OK, so Janelle Dumoulin, China says it will respond. What's that response likely to look like?
You know, it hasn't said, and there are a few things China could do, but they all come with a cost. Now, it could, for example, extend the tariffs it already has on U.S. products, or return barriers that it had already earlier reversed, say, like on U.S. auto imports. The problem is that China exports more than the U.S. does, and it would very quickly run out of U.S. products to impose tariffs on if it includes semiconductors and Boeing planes. Alternative suppliers for those things would also be in a position to raise prices dramatically, so Beijing could lose out on that end. What it could also do is devalue its currency to make its exports cheaper, but that's unlikely to go over well domestically. Again, alternatively, it could also respond with a boycott of American goods. The problem is that a lot of Chinese workers do work in the assembly and manufacture of American goods like iPhones, so that could backfire as well. So it's wide open what China could do at this particular moment, but you have quite a few analysts saying that from an economic standpoint and with a perspective that what they actually want to do is achieve a deal, the most prudent thing to do would be nothing. Now, this would obviously have already occurred to Chinese policymakers, but they're also under political pressure to act. So we're just going to have to see which side wins that argument. OK, so
Oliver Salet, just bounce us through the main sticking points, Oliver.
So reportedly, there's a debate going on in the Chinese Communist Party about within reformers and hardliners about the question how to move on here, and that led to a very late decision of the Chinese President Xi Jinping over the question how to tackle the ongoing debate. The key sticking points here are the protection of intellectual property, American one, of course, and also certain laws restraining American businesses. And eventually the clash erupted then over the question which part of the final agreement should be made public. Essentially, the Chinese side does not want to publicly admit that its intellectual property laws are flawed, because that would also mean that they would look as the losers of this trade agreement.
All right. Oliver Salet in Washington, Janelle Dumoulin from DW Business. Thank you both.